rule of thumb for investors in these IPOs has been not only that some of the more under the radar stocks, but also those that have these recurring revenue models, these big SaaS companies that just have predictable revenue streams plus growth. Investors like to see both of those. Not necessarily profitability right now, although it's one of those nice to have things, but it is kind of that SaaS model, as Dan was mentioning, the Datadogs of the world. Zoom, we saw what happened to them in the first half of the year. Those are the types of companies that our investors are favoring right now.
It's ironic, Dan, because the banner names, Uber and Lyft in particular, have not done that well, but the IPO basket in general is up like 30% this year. So do you think we're seeing more companies coming to market because it has been pretty lucrative, or is there a sense that they have to get out now?
I don't think it's a sense they have to get out now. You know, I wrote yesterday that this whole idea that it used to be you didn't want to price into a presidential election year, right? Too much uncertainty, who's going to win. But given how much uncertainty we have from the current White House, you know, we didn't know there was going to be a vaping announcement today until a few minutes ago. Given that uncertainty, I don't think going out now or next year really so much matters. I think it's more that just you have this big basket of companies that have raised a large amount of money in the private markets, and they simply feel they're ready to go, and they're kind of 5-6 years old. They have employees who'd like to get paid.
Well, so if they don't have to worry, so in other words, there's no rush to get out ahead of the election year. So then why not wait it out? I mean, Airbnb seems to be taking that approach, right?
I mean, you can, and some are. Airbnb is taking that approach. Didi, you know, on the ride hail, they haven't gone out this year. But I think for most of them, if you feel your numbers are ready to go, the market, as you say, the basket of IPOs has done well this year. Why not take it out now? And obviously, we are still in the good market. People aren't, I don't think it's concerned about the presidential election, but there is the concern of a recession and what that would do to markets next year.
All right, Duncan Davidson is joining the conversation now as well. He's with Bullpen Capital. And Duncan, you had a sort of clever, I thought, way of summarizing what we've seen in the IPO market this year. You kind of break it down between the SoftBank stocks and everybody else. What is that telling you about this market?
Well, let's define SoftBank stocks. Uber, WeWork, maybe Slack. They drove these things up to really high private values for their own purposes. And so they've traded down, or WeWork's a terrible situation right now. I was afraid for a bit that WeWork alone, if it went out with some crazy value, might collapse the IPO window. But it's not going to happen. They're managing it so well in the background. It'll come out. If it comes out, okay. It won't hurt the rest of us, is what I'm saying.
So what do you make of the arguments, or not arguments, but the analysis that private market valuations, Duncan, are so much higher than what public markets are assigning? Does that tell you that Silicon Valley is out of whack, or does it tell you that the general public is, you know, rating stocks as way too cheap right now, which would make sense in this kind of macro environment?
Let's compare Uber and Lyft. Lyft goes out public at a higher value than the last private round. Uber goes out public at a lower value than the last private round. It's not all stocks have high private value. I'm just defining SoftBank stocks. Maybe I'm unfairly picking on SoftBank.
Right.
But a small handful of these companies were driven up to really high valuations, usually with what I'll call structure in the private round, preferences and other things that artificially inflated the price way above what it should be in a public offering. But in general, not very many of the stocks did that.
Last quick question.
So this is a small group of stocks, not a whole thing.
Sure. Which of the crop that's now coming would you be a buyer of, Duncan?
Well, there's a couple coming. Datadog. I mean, there's some coming out that look stunning, absolutely stunning. I mean, I love Zoom. There's some Zoom-like IPOs coming out more on the B2B side. Peloton, not so much.